Hello and welcome to the day ahead. It is Thursday, March the 27th. I'm Andrew Gagan. Well, the local share market is set to open negatively with ASX futures off by almost 0.5%. It was risk off for investors globally overnight ahead of US President Donald Trump announcing levies on car makers. Stocks on Wall Street tumbled, dragged lower by mega cap tech. That saw Tesla shares plummet, while shares of other car makers also fell, including Ford and General Motors, although Ford managing to make a bit of a comeback there. Heavyweight chipmaker Nvidia fell heavily, as did Broadcom, which set the chip index down around 4%. This follows news reports that Microsoft is ditching plans for new data centers in the US and Europe. US listed shares of copper miners rose, tracking the commodity price higher, helped by expectations of import tariffs that President Trump may impose on the metal. Shares of Rio and BHP finishing in the green. Elsewhere, Dollar Tree rose after the discount retail chain said it's nearing a sale of its Family Dollar business to a consortium of private equity investors for around $1 billion. And GameStop shares surged following its board's unanimous approval to incorporate Bitcoin as a Treasury reserve asset. Well, President Trump has announced plans for long-promised tariffs on automotive imports, widening the global trade war in a move car industry experts expect will drive up prices and stymie production. The US administration says it will impose 25% tariffs on all cars not made in the United States, which will also apply to light trucks. He's also flagged tariffs on pharmaceuticals. More tariffs and a global trade war raise the spectre of rising inflation. FOMC member Alberto Muslim's cautioning that inflation could stall above 2% due to effects from tariffs, saying, I would be very wary of assuming that the impact of tariff increases on inflation will be entirely temporary, or that a full look-through strategy will be necessarily appropriate. I would be especially vigilant about indirect second-round effects on inflation. Whereas fellow Fed member Neil Kashkari said we're in a very good place to just sit here until we get a lot more information on the tariff front, on the immigration front, on the tax front. I'd expect the Fed funds rate to be modestly lower at the end of this year. Well, US Treasury yields inched higher, the US 2-year hovering around 4%, the 10-year was around 4.35%. Markets are pricing in a 70% chance the Fed funds rate will be cut by 25 basis points by June. The US dollar rose ahead of the month end and amid a more risk-averse mood. The Aussie is trading at 62.9 US cents and Bitcoin is sitting around 87,000 US dollars. Oil prices have risen as data showed US crude oil and fuel inventories fell last week. Well, there's concern about tighter global supply as the US threatens tariffs on nations buying Venezuelan crude. Brent crude futures up 1% at $73 a barrel. Copper's up around 0.5%. Iron ore remains at $102 US dollars a tonne. And the gold price little changed at $3,020 an ounce. And data-wise locally today, we get the national accounts for the December quarter. That is your day ahead. See you again tomorrow.